Before we get into some specific names, I wonder what you make of this chase, really, that we've seen since January 4th and the idea now that people are feeling left behind in this market.
Well, if they're feeling left behind, we're back to where we were last fall. So, I think you have to take it in stride. Look at the highs that we hit in August. This market is still trending sideways, and I think pretty much in a trading range. It's tough to figure out where exactly the market's going to run. I'm glad we came back up from December. Thank goodness for that. But so far, I think we're going to flatten out in here. I don't know that we have a lot of momentum.
Why, Chris?
You know, it really is. Earnings season is coming out flat. I think there's some enormous risks out on the horizon ahead of us. Obviously, here in the UK, you've got the whole question about Brexit. In the U.S., you've got more reports coming out in terms of Washington, uncertainty about trade. The market's been so fickle. I mean, one day it's comfortable with the China trade, then the other day it's panicked about it. So volatility is here to stay. I'm just not sure we're going to have a lot of upside momentum. I think people in their asset allocation should probably be neutral to the market, but I wouldn't be overly aggressive in this kind of market. I'm actually a bit more cautious, kind of holding back.
Chris, give me your take on this push toward regulating big tech companies. You're holding a number of them California companies as well. How do you calculate the likely outcomes and pivotal moments to watch in determining whether Facebook, Google, Amazon really are going to get constrained by these efforts in the medium term?
You know, trying to forecast regulation is really, really hard. And we're long those names because we own the entire U.S. market. So we own it as a whole. Those tech stocks, the FANG stocks in particular, are the largest share. So it's not that my active managers want to own those. It's just that we hold them because it's an index. And I think they really have a regulatory risk threat ahead of them. I've been long complaining of the fact that the corporate boards are not holding management accountable. And they've made some critical errors, and I think been involved in, obviously, the privacy issues, now other growing issues around those companies that now there's calls to breaking them up. We're not saying that at all. And I think, in my view, there probably ought to be a little bit of regulation. You know, our phones were regulated, the mail was regulated. Not that I want to regulate the internet, but these companies are so dominant and have had such a, in many cases, a negative impact on society. I think there needs to be some discussion. I'd like to see it from the corporate board down rather than from, say, regulators up. But this is a huge issue. I think it needs to be debated.
Yeah, and just in terms of that, Chris, I mean, just today we've got this op-ed in the New York Times, the case for investigating Facebook by Congressman Cicilline here, where he really sort of argues that the FTC needs to do a much better job. There needs to be more, enforcement is long overdue is basically how he ends this. I mean, you've been invested in this company through all the trials and tribulations and scandals of the past year plus. Is there anything here, whether it's this company specifically or some of these other tech names that CalSTRS holds, that would cause you to sell or re-examine your investment thesis?
Well, Morgan, you're getting into our investment thesis, which is a challenge because we are long-term investors and we're going to hold the U.S. market as an index fund. So I'm not going to make an active decision of overweighting and underweighting relative to the cap-weighted index. So for us, it's not just an active trading decision of being low or below these stocks. I do have some active managers, and you're right. In their case, I think they're realizing, boy, the upside looks tremendous, and so that's why people want to be long these stocks. But then in other cases, they want to back up a little bit and be wary of these stocks. So is regulation long overdue? I'm not sure. I just look back at history and the fact that, boy, the mail was always regulated, telephones, the radio waves, the television is regulated. This is a new communication tool that went out unregulated. I'm not a big fan of regulations again, but maybe there needs to be that dialogue, that there's got to be some controls around this, because you've seen the impacts here in Europe. Obviously, I'm here to learn about Brexit and all the issues surround that, and there's been some questions about how social media played out in that vote. And then there are obviously enormous issues in America, and the question about our last election and how social media played out in that. So those are profound changes to society, and I think that warrants a discussion. So I'm not surprised to hear these calls.
When it comes to Facebook specifically, Chris, I wonder what you make of the run-up so far this year. Is that truly about engagement staying intact? And I got to believe that at least their talk about a privacy-centric model is something you would ostensibly applaud, no?
Yeah, I think they're finally trying to realize that their product, think of it as just as a product, they've got to put more controls and more protections around it. They can't just dump it out on society. And I'm not surprised that the earnings are up. It's a revenue-based model where they're taking people's data, where they're not paying a price for that. They're taking it for free and taking a gain on it. I think that has to be an honest discussion. And you're starting to see some segments of the population question the Facebook model. And it's very interesting to me when you talk to younger people. There's a very low participation rate when it comes to Facebook. It's really becoming quite generational. And they're out in so many other product areas. Smartly, they're diversifying. But I'm going to go back and hold the corporate board accountable. They need more independent board members who are willing to hold Zuckerberg and Sandberg accountable. The fact that they lost some of those key executives is worrisome to me. I think that says, because I can't get the culture, that told me something, that there's something wrong in that culture. There's probably something wrong in that company, and that's dangerous long-term for investors.
Speaking of accountability, what do you think at this point is the legacy of dual-class shares as we look at these IPOs coming up, Lyft being a prime example? I mean, Google famously did it. Facebook did it. Those worked out okay. Snap so far has not worked out well. Is it time to make a big push from the investor end to not allow this, or allow them just in certain forms or structures? What do you think?
John, I would say the jury is still out that it worked out okay, because I think there are problems that start to show up with this dual-class stock. I can't stand it. To me, it's out of here. One share, one vote. We believe in democracy. I understand why Silicon Valley wants to control it. But if they want other people's capital, they want to use your capital, they want to use our capital, they've got to give us a chance to have a vote. That's just the way I want to work and the way I want to manage money. So I think these are still open questions. I know we're pushing back on it. They want to reward investors who think long term. Our average holding period in some of these stocks is 30, 40 years. That's long term. It's longer than some of these founders might even be in their stock. So whether it's a different class, we've got to find a better mechanism. And you're seeing people in the institutional investor community try different tools to figure out how to reward people who will hold the stock for the long term versus people who are fast money and will trade it quickly and don't really care about the management and the long-term nature of the company. So we've got a mismatch. We've got to manage it. I don't like the dual-class shares that really enrich management and encase them in the company. We're seeing problems with that lack of accountability.
Yeah, you've been very outspoken on this, especially when it does come to a company like Facebook. So just bottom line, Chris, with some of these IPOs coming to market, whether it is Levi Strauss, Lyft, or maybe some of the other ones we're expecting this year, will you put your capital to work in those companies with those dual class structures in place?
Well, you're rightly so. You're going to challenge me because on one hand, I'm a private equity investor, and that's where we're demanding them to issue just common stock and not split cash. On the other hand, I do own the U.S. equity market. So if these shares get listed and they're part of the broad index, then I am going to own them because, again, I want to own that market as a whole. I don't want to own just slices of it. So it has to do with that investment philosophy. Will my active managers buy it? That's going to be an open question because they're going to look at that governance and be uncertain about it, and it's going to raise risk.